Welcome back to The Profitable Catholic. Today is the first episode in a 4-part series on the 4 most important numbers every business owner needs to know. The 4 numbers are revenue, which is the total amount of money your business brings in, gross profit, which is what's left after deducting the direct costs of what you sell, net profit, which is what's left after deducting all expenses, and cash, which is the amount of money sitting in your bank account. If you look at no other financial numbers in your business, you want to make sure you're looking at these 4 numbers. This episode will kick off the series by looking at revenue. Welcome to The Profitable Catholic, the podcast for Catholic business owners who want to simplify the financial side of business. I'm Tammy, a CPA, business owner, and fellow Catholic. And each week, I'll share clear, practical guidance based on real questions from business owners like you. Let's take the mystery out of your money and invite God into your business and your bottom line so you can make confident financial decisions. The first step to understanding a financial number is to define it. Revenue is the total amount of money your business earns from selling your products or services. Revenue can also be called sales, gross income, or top-line income. If you hear any of these words out in the wild, you know that they are all referring to the same thing, revenue. And please note that revenue is the money your business earns before paying any of your expenses. Because sometimes there can be confusion about that. So revenue is before you have deducted any of your expenses. And some examples. So if you own a dental clinic and you bill $100,000 this month for cleanings, exams, and procedures, then $100,000 is your revenue. Or if you run a marketing agency and invoice a client $30,000 as a retainer, that $30,000 is revenue for your business. But here's where things can get confusing. Revenue is not the same as profit or cash. Just because your business brought in $100,000 of revenue doesn't mean you made $100,000 or that you have $100,000 sitting in your bank account. Here are 2 key differences to remember. First is the difference between revenue and profit. Revenue is the total amount earned. Profit is what's left after your expenses. So you can have high revenue and still have no profit if your expenses are too high. Second is the difference between revenue and cash. When you sell something, you can have revenue, but you may not have the cash yet. Cash is received when the client actually pays. So if you send an invoice today, but get paid in 30 days, today that's revenue now and then cash later. In this episode, we're focusing on revenue. In future episodes, we'll talk about profit and cash. Now that we've defined what revenue is, it's time to talk about why knowing your revenue number is so important. One of the first things you want to focus on for your revenue is looking at your revenue trends. Revenue might be going up, going down, staying flat, or fluctuating. You can learn so much just by looking at your revenue trend. Ideally, it's best to have a visual chart of your revenue by month or week because it's so much easier to see trends when you're presented with a visual chart rather than just a spreadsheet full of numbers. If revenue is going up, that is likely a sign of a growing business. If you see a trend of revenue going up consistently, then that may be an indicator that it's time to expand operations. Or maybe you're reaching a point where you need to hire more people or buy some new equipment. Maybe you implemented a new marketing campaign and the increased revenue is letting you know that your marketing is working. Or maybe you implemented a new marketing campaign and revenue is not going up. That's a sign to change something about the marketing campaign. Maybe you've noticed that revenue is going up and you're not really sure why. That's a great chance to dig into and understand why that's happening. Now, maybe your revenue is trending down. This can be an early warning sign that some changes need to be made in your business to either try to increase revenue or cut back on expenses. Maybe the revenue in your business fluctuates a lot. Maybe you have a seasonal business where fluctuations are expected. Knowing about those seasonal revenue fluctuations can help you plan for the busy and less busy times. Or maybe your revenue fluctuates in a non-seasonal pattern. Seeing revenue that fluctuates in a non-seasonal pattern might help you to identify the things that are going on in your business that drive the fluctuations. For example, often businesses may do a big focus on marketing. This brings in a bunch of new customers. The business gets busy serving the new customers and stops the marketing. Then the business gets less busy and goes back to focusing on marketing. This creates a feast and famine fluctuation in revenue. If a business identifies this pattern, they may choose to make marketing something they focus on all year in order to reduce the fluctuations in revenue. Now, maybe your business has random fluctuations that are completely out of your control. Well, if you know and identify this, you can decide to build up a larger cash reserve in your business to help you get through the times when revenue is down. There are so many insights you can get about your business just by looking at revenue. I've just touched on a few. And revenue is not just a number that's interesting to you as the business owner. It's also a number that is interesting to outsiders. Banks, lenders, and investors are all going to take a hard look at your revenue. Revenue is going to be one of the first numbers that banks and investors are going to ask about. They might ask, how much does the business bring in? Which is the same thing as asking, how much is revenue? Healthy revenue opens the doors to investors, financing, partnerships, and growth. Now that we've talked about the importance of understanding your revenue, I want to touch on common mistakes business owners make with revenue. Mistake number one is focusing only on total revenue. If one or two clients make up most of your revenue, you're at risk. If they leave, your revenue drops overnight. You want to break your revenue down by client or service. This will highlight if you have a vulnerability in your revenue if you're too dependent on one particular customer or product or service. Mistake number two is chasing vanity revenue. It's easy to equate big numbers with success. Businesses often like to brag about their revenue. They might call themselves a 7 or 8 figure business or announce how they had their first 6 or 7 figure month. But plenty of businesses hit these big numbers and still can't pay themselves consistently. A few years ago, I was talking with a colleague who had a client that had gone from 4 million per year of revenue to 7 million per year. And they had done that in just 12 months. On the outside, that looked like a phenomenal success. This business had almost doubled their revenue in 1 year. But the part you didn't see is that this business was on the verge of bankruptcy because they were only focusing on revenue and ignoring other parts of their business. This might be one of the biggest mistakes established business owners make. The mistake is that they think that more revenue is the magic fix for their business when often there are other things going on in their business that need to be fixed. And the other 3 essential numbers I'm going to talk about in the next 3 episodes will help uncover some of the other things a business might need to fix. When it comes to revenue, don't chase bigger, chase better. Now let's get practical about how to track and improve your revenue. Step 1, track your revenue monthly. Pull a report from QuickBooks or whatever program you use. Look at the last 12 months. See if it's growing, steady, or declining. Step 2 is to break down your revenue by category. Don't just look at the total. Look by service line or product. You may have certain products or services that contribute most of your revenue. That is valuable insight. Step 3 is to look for patterns. Compare month to month and year to year. When you notice trends, you can make smart, data-driven decisions instead of just guessing. And step 4 is to forecast your revenue. Use the past results to predict the next 3 or 6 months. Even a rough forecast helps you to plan confidently. Predictable revenue helps you plan and reduces stress. You're not just surviving month to month, you're stewarding what God's entrusted to you intentionally. Earlier in the episode, I mentioned that understanding your revenue is a lot easier if you have a visual graph to look at. So I wanted to mention an excellent program that can do this for you. The program is called Fathom HQ. Fathom is spelled Fathom. Now, there is a note-taking app that's also called Fathom, and that's not what I'm talking about. The Fathom I'm talking about is a financial reporting app. At the time of this recording, this website is fathomhq.com. Fathom is a great little program. I use it in my business and with my clients too. Do I think you need to use it? No, but I thought I would throw it out there for people that might be interested. If you know how to whip up a graph or a chart in Excel or Google Sheets, then by all means, go ahead and use a tool like that too. So to wrap up, revenue is a critical number for you to know and understand in your business. But revenue alone doesn't tell the whole story. You can have high revenue and still be struggling financially. That's why this podcast series is not the one essential number you need to know, but the 4 essential numbers you need to know. In this episode, we covered what revenue is, why it matters, mistakes to avoid, and the steps to start tracking your revenue. The next step is to take it to prayer. Schedule a monthly meeting with God to sit down in prayer and talk about your revenue. Ask for His insight into what's going well and what you can improve on. And if today's episode helped you, please share it with another Catholic business owner who could use more clarity in their finances. And don't forget to subscribe so you don't miss next week's episode, where we'll dive into the second essential number to know, which is gross profit. I'd like to close with part of the Surrender Novena. Oh Jesus, I surrender myself to you. Take care of everything. Oh Jesus, I surrender myself to you. Take care of everything. Oh Jesus, I surrender myself to you. Take care of everything. In the name of the Father, the Son, and the Holy Spirit. Amen. Thank you for listening to The Profitable Catholic. Don't forget to download my Financial Profit Playbook, a step-by-step guide to help you boost your profit and cash flow by avoiding the most common financial mistakes business owners make. Please visit hyska.com/playbook. That's hyska.com/playbook to get your copy. Until next time, I pray that God will bless your business and your bottom line.